A major U.S. index just flipped negative for the year. Find out which one it was and how it could impact the markets in the rest of our video.
All of the major indices that we track were negative last week. The S&P 500 down about 1%. The NASDAQ was also down about 0.68%, and the Dow down over 2%. And I'm going to talk a little bit more about the Dow in a little bit, but the Dow actually just flipped negative for the year. Foreign and emerging markets were also down, with foreign stocks down about 1% and emerging markets down over 2%. And both of those are not doing very well still this year, with emerging markets down over 5% year to date. As Matt mentioned in the introduction, and as I just mentioned when I was going over the returns, the Dow Jones actually just went negative for the year. And if you're not familiar with the Dow Jones is a group of 30 of the largest US companies. So what we're looking at are US-based companies that are large caps. Now, if you look at the chart in front of you, the blue line right in the middle is where the Dow Jones started at the beginning of the year. And if you look towards the far right, last week with the red candles, the Dow Jones actually went negative. Now, the reason that this is really concerning is because the major US indices aren't trading in line. The Dow Jones being negative now, the S&P 500 is still up about 3%, and the NASDAQ is still up over 10%, while, as I mentioned in the returns, foreign and emerging markets are down big. Now, this is concerning again is because in 2010 until now, we saw almost all of those major indices trading up. Now this year, we don't see that continuity, and some of the indexes are up and some are down. So we're not sure which way this market's going to go, and at the end of the day, we're going to have to see if the bulls or the bears win this battle.
First in the news from last week, OPEC met, and if you're not familiar with what OPEC is the governing body that oversees approximately 44% of the global oil production. And the market was expecting OPEC to come out and say that they were going to start increasing oil production. But in a surprise move, OPEC announced that they're going to actually be okay with limiting oil production going forward. And because of that, oil spiked by over 6% last week and approached almost $70 a barrel. Also in the news last week, the Trump administration came out and continued the trade war with China by saying that they were looking to increase tariffs by $200 billion on top of the originally proposed $50 billion on select goods being imported from China. And lastly, continuing all of the trade war rhetoric from the G7 summit, President Trump has threatened to impose a 20% tariff on European auto imports. So it seems like all of the trade talks are going to continue to impact the markets for the weeks to come. So if all of the tariffs come to fruition that are being talked about right now, we could see inflation start to ramp up in this country.
Over the next couple of months, we're keeping a really close eye on the Federal Reserve, because if inflation does kick in, then the Federal Reserve may not stick to their 4 rate hikes that they said about this year, and that might have a big impact on the markets.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Go ahead and like our Facebook page and share our video. Thanks a lot.